This is Mike Reed with CNElect, and welcome to this week's Crude Highlights. We remain flat for the third consecutive week. In 2018, unlevered, we were up 22%. Year-to-date, unlevered, we're down 7.5%. Our fundamentals remain bearish, but the technicals remain bullish. So we're watching for the transition from technicals to fundamentals. By bearish, we've actually widened out our July 2019 price view. We believe that contract will go off the board between $48 and $56 a barrel. That compares to today's futures price of about $58 per barrel. The market had a huge surprise, including we at CNElect, with this week's crude stocks. The crude stocks draw was about 8.6 million barrels, compared to our forecast being up 4.2 and the market's view being up 3.0. The surprise caught everybody by surprise. Nobody was even in the magnitude of a draw of 8.6. We're going to talk about the causality of that draw in just a minute. I really want to focus on three key things in the crude market this week. The first is our currency is down 0.4% week on week, but it's up 7.8% over the past 45 weeks. We're currently sitting on the bottom of the first percentile with the value of the US dollar. It's our view that it's got to fall from the intersection of the first to second quartile. It's got to fall from there down to the median before you're going to have any appreciable bullish price sentiment. And so it's got to trend towards the median. It's got to fall about 13% for that to happen. So that's the number one thing that we're watching, is what does the US dollar do? The second thing we're watching is the forward curve is currently in contango. In contango, the market is signaling surplus crude, store it today, withdraw it at a future date. We've been contango for the 17th consecutive week. We're watching this closely to see if it will flip to backwardation. If in the event it flips to backwardation, we're going to flip our signal from bearish crude to bullish. We don't see anything imminent that suggests the curve is going to tilt from contango to backwardated. Let's talk about crude imports. I alluded to this in the beginning. This is what caught everybody by surprise. Crude imports fell to 5.9 million barrels per day. It's the lowest import level observed in the past 23 years. That's a long time ago. It was down 1.6 million barrels per day week on week. It was down 21% week on week. The huge drop, we believe, was caused by U.S. sanctions rerouting all the ocean's vessels. In other words, Venezuelan crude, instead of coming to the U.S., Venezuelan crude is now going to India and China. All of these reroutings have caused the traditional U.S. importers of crude to change to a new supply. So it looks, when you look across the board at all of the traditional importers of crude, they were all down week on week. We've got a whole bunch of new people that were up week on week, but net, we were still down. We also had the Canadian Keystone Pipeline was out of service last week for 5 of the 7 reporting days. That has since restarted, so that'll be a big bounce going into next week's release. This may not be an outlier, but it may as well. This is not that unusual. We have had bigger draws, but you have to go back somewhere between 8 months and 6 years, depending upon whether you're measuring it in barrels per day or you're measuring it as a percent change. So it's not an infrequent event. So we're going to label it for today as an outlier. We're going to need 2 more weeks because we believe it takes 3 weeks to establish a trend. For this and much more on crude, please visit us at cnelect.com.